All right, let's get into this lesson. It should just be a quick one, to be honest, because it's equilibrium that we're talking about for today. And to be honest, it is a retracement tool and there's not too much to be explaining about it because it kind of just does the work for you. But basically, I'll show you how we mark it up, where we can use it, and basically why we use it. So first of all, what is equilibrium? I'm just going to call it EQ for the rest of this video because I don't want to say that big ass word for the rest of it. Anyway, basically what it is, in simple terms, it's like a discounted price, right? So price will be at a certain point, push up, and then in order for the people that missed that move, price will then come back down into a discounted area, the EQ, and then more buyers can come into the market at that point, and then we look to push even higher. So it's pretty basic in terms of that, but how do we actually mark up equilibrium? So I'll give you an example here. I'll put it into replay mode for this, where I mark my EQ level. As I said, it's a retracement tool. It's not like our break of structure. It is just a sort of a gauge on what could possibly happen in the market when price gets to that certain point. So let's set up this. We have a hypothetical liquidity sweep, and then we have our next break of structure here. So the way I use equilibrium is for the break of structure move. I am going from, this is what the Gann box is used for as well, by the way. I just realized that we went through this in the blue rose tier, but I didn't actually explain it yet. So the Gann box, I'm not sure if there's different settings. How do I go to my settings? Different settings for it. I actually think there is now. But this is what I have my settings at for the Gann box. If you want to be changing it, you can change the colors, do whatever. But basically, I just have the 0 point, and then I have the 1 point, and then of course I have the 0.5 point, which is our EQ level. So that's what a Gann box looks like, and this is what we are using to mark up the equilibrium level. It is basically the discounted price, as I said before. So we have a push up here, a leg up. It doesn't even need to be after a break of structure. You can probably find them in multiple different places, but I of course use them after a break of structure. So as we can see, we of course have the leg up. This is probably the simplest tool ever because all you got to do now is click your Gann box, and then from the low of this move that was pushing up in this example, we can just add the bottom of our Gann box just like that, and then we want to come up to the finish of that push. You know that this low reaches to this high. That is how we set up our EQ level. It is the low to the high. We are not trying to, put EQ levels around here or anything like that. Yes, that possibly could have been valid once this candle was printing. It would have started off bearish, but as we can see, we continued higher. So basically, as price is moving, just keep moving this, adjusting this with it as we get higher. But as we can see, once we get a confirmed low and then confirmed high, we drag our Gann box, and that is the EQ level. I'm not solely entering the market at this level if price does come back to touch it, but I can use it, as I said before, as a gauge to determine whether or not other traders are going to be buying and selling at this point. So if you play price forward a few candles, we do have to be patient, but we can see that eventually this does end up getting hit. I'll drag it out a little bit, but I don't move this, right? So we're still at the low, we're still at the high EQ level. At this point, this is the discounted price for the potential move higher. So really simply, we can see equilibrium level gets touched. It did go slightly below it, but that's absolutely fine. That's even more of a discount. And then we can see that we did get a little push up to the upside again from that. So what does this tell us? It basically tells us that price gave a push to the upside, and then we came back into a discounted area. Players and traders that missed the move could potentially be buying back in here, which we can see some of them did, and we ended up pushing higher. All right, let's look for a bearish example, and we can take price back through here in the replay mode, and we can, let's get rid of that. We can see that we have this leg down from the candle's high to the low. Not until that low is put in do we stop moving our EQ level. Once that low is put in, that's when we stop moving our EQ level, and then we can play price forward a couple of candles. We can see what happens. We get a touch of the level back at the equilibrium, and then what happens after that? Play price forward a little bit, and we can see the market moves even further down. So basically, the reason that we are using this equilibrium level is because smart money concepts, which is what we're trading, smart money traders do not buy at a premium level, right? So with this move down, this is the premium level. We are not looking to enter into the market here because that would give us a stop loss of something like 18 pips. Instead, price comes back, taps the equilibrium level, and then we can see if we were to enter off a touch of it, that same stop loss would then be 11 pips. So obviously you're getting a discount, you're getting a better risk to reward ratio at the same time. And this is just how the smart money concept traders are looking to trade in the market. It is a very simple concept. There's not too much to be covering. I will say though, if you have a break of structure level paired up with where your equilibrium level ended up being, that is even better. And then if you also have a fair value gap where the equilibrium level rests within, that is also basically a bonus, because if we're combining two of our retracement tools like the fair value gap and the EQ level, then obviously at that point the probability goes up that the market could potentially be moving back in our favor. All right, your homework for this one, we are going to go out and get 5 different examples of where equilibrium was tapped before price inevitably went the direction it desired. So find a couple of examples, bullish and bearish, and then take note of it, learn it. It's not too hard to do because it basically does it for you, but just remember that we are only placing the equilibrium level at the high and the low. So we've got equilibrium levels here and here, and we have equilibrium levels here and here, for example. That's crazy that both of them tapped and then went the other way. But yeah, that is how we're marking up EQ level. All right, just a little tip for you guys that actually watched to the end. You would have seen that when I go to mark up my stuff, I can get bang on to the high or low of the candle, and then I can move my thing like straight. How do we do that? It is a simple command. All you want to do is select your tool, for example, the trend line tool, and then hover above whatever high or low you want to put it at. Let's just put it at this one. It's easier to see. Holding command on the Mac, so I guess that's what, control on Windows, maybe. Holding command basically activates the magnet you can see over there on the left. You can also flick this on and it like permanently will stick to everything as you hover above it, but I obviously don't want that to happen. So hover above the high or low that you want to put it on, hold command, it'll stick it to it. Then click. Now obviously, as you can see, you have free roam of where you want to drag this trend line out to, but if we hold down shift, it'll lock it into place at 90 degrees, 45 degrees, and that's also 90 degrees, isn't it? Anyway, it'll lock it in at that, so it'll always make a straight line for you. So there you go. You don't have to always use these ones that go the entire way and can end up making your chart look a little bit messy. So hopefully that helps, and that's only for you guys to stay to the end.